Hey everyone, Dan here. We are just before market close on Friday, June 11th. Today we're going to do an updated look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. Let's jump right in. So SoFi, I think we have a few things to talk about today. One is clearly just sort of like from a trend and chart analysis perspective. Let's get sort of our bearings on what's going on and what we might be able to look for next week. And then we'll take a look at what we had long been tracking as a potential short squeeze. And I think we have some updates to go over there that might impact kind of how you condense that information and utilize it in sort of like your trading execution. Looking for all my words today, apparently. So here's the 5-day, 5-minute chart for SoFi. Obviously we had this huge run up on the 8th, and then, have definitely come down quite a bit since then, but actually are holding really nicely. I mean, I know that nobody wants to see, today's technically a red day. I know no one wants to see these like mostly sideways days, especially if they then appear red. Yesterday was actually mostly sideways, but appeared slightly green. So it's just sort of like 6 of one, half a dozen of another, in my opinion. What we're essentially in right now, and this is just going on for a couple of days, so this isn't anything like insane, but we're essentially just in like a bit of a consolidation channel here that is moving slightly upward. So yes, we're red today, but in terms of like this consolidation channel that's been going on for the last couple of days, it is slightly upward. But that said, it is mostly just sideways, and in my opinion, SoFi is waiting to try to figure out what its next positioning and next move is in terms of like a big up or a big down. I still think a few things hold true. Obviously, this 2263 price zone that we charted a while back has been very, very important, as it was support here, and then it lost its support there and it became support again, and it has basically been hanging around this zone all day since it had this big sell-off at open. And so its ability to hold that 2263 has proved important in order to give it at least some aspects of stabilization, while this big sell-off has been sort of trying to push it down. I don't know, big sell-off is probably not correct, but you see this dip area here, that did basically put it back to where it was when it had that big run up at the end of the day on the 8th. So from that perspective, talking about anyone who may have like bought in here or bought in here and sold out there, that looks like a loss on their books. The other thing besides this 2263 holding is we're building a little bit of a cushion here as well. This 2229 is actually probably our next immediate level of support, which is good. Not that we want to see it have to get down there, but it's nice to have a level of support but before that 2121. And I actually think there's an additional one that has developed since that is right about here, right about $22. So if it needs it, it does have a growing cushion of support, which is helpful from the perspective of if you're trying to figure out what's my risk tolerance level and at what point would I just kind of cut losses. These give you many, many layers for it to fall through, whereas if it was just 2263 and then all the way down to 2121 and you're hoping that if it gets down to 2121 that it bounces, that's a pretty like unnerving like $1.50 or so, because $1.50 for a $20 stock is a huge percent. So that's what I would look for in the near term. That 2361 has proven here and here to be just sort of like unapproachable, and actually really here as well. It wasn't able to regain support there. So that would be the next one that I'd look for it to take a run at. We were talking about sort of like all of the volume that had come into play here on that day, Wednesday, when we looked at that video. And, so I'd be hoping that if it came back and approached that zone again, I know it tried to on the following day, that there would be some buying pressure this time. It looked like there was predominantly selling pressure at that point. But because there's so much volume up there just a couple of days ago, if it can make a run up to basically attempt that 2361 support again, I think you may encounter a significant amount of buying pressure that could help push the stock up and over that and then make a run at that 24 support, which we've been looking for. Ultimately, the need, in my opinion, for the bullish case scenario in terms of I know folks are looking for, there's certainly a big camp of folks that are looking for this as a long-term hold, and obviously the 5-day, 5-minute chart isn't probably what you're going to be looking at. But for anyone who's looking for more significant, roll-ups in the coming days, especially folks who have options, for example, most of my positioning in SoFi is in options that are 6 to 8 weeks out. You're looking for a big move up. The best opportunity for a big move up is that 2506 support. I think that support level would sort of solidify, lock in a bunch of gains for folks, would also kind of complete the turning of upside down any short positions that still remain, especially those that came in at that 2480 range when they had that big attempted beat down on this day, following that big run up. We clearly identified that in the data at that time. So if you want to go back and take a look at that video, we point out exactly how we knew what had happened, what led to that sell-off the following day, at least as it pertains to, the role that the shorts played in it. So that's what I would be looking for. If we want to take a peek at the RSI here, pretty low. We're under 40, so that's plenty of opportunity for buying pressure to come into the market. It hasn't really been able to muster anything above, the midpoint today. A couple of times sort of peeked its head over there, but certainly no runs over into overbought territory since the pre-market. So plenty of opportunity there, but it clearly just needs momentum. And and that's further exemplified by this. The MACD is just so flat. It's generally so flat. I mean, even with this big dip here, that's a relatively flat bearish momentum area on the histogram. And right now it's sitting right at the baseline. So, I mean, you can't be much flatter than minus 0.01, basically sitting on the baseline waiting to make its next move. So in my opinion, it needs to choose a direction and just sort of roll it out. And at least then you'll know what you're sort of looking for in the next move. MAs are kind of bunching up here. Unfortunately, crossed underneath the 200, so in a bit of a bearish scenario at the moment, even though, like I said, this consolidation channel is moving slightly up. I think that's the most important thing for us to look for it to hold in the coming days is this trend line that goes slightly up here and is actually very, very close to where it's sitting right now. We would really, really want it to hold that in order to not fall out of support at 22.36 and then see what happens at 22. So those are the important factors in the days ahead, in my opinion. Let's take a look at the short data. Let me see where I am here. Okay, give me a moment. All right, so here we are. So good news is we got some updated short data. Let me just move this over so you can see. So a bit of a mixed bag here. The updated short data is now as of 5/28, so May 28th, and this table includes any of the stocks that are over 20% of the float being shorted. And as we know before, SoFi was well into the 30s, pushing 40 at one point. And so if we do just a quick look here for SoFi, doesn't come up. So for whatever reason, it's fallen below 20% on the short percentage of the float being shorted side of things. And if we go and look at leading up to 5/28, look at these big runs here. You can ignore that. But if you look at where some of the big runs happened, let's just pop this out a month. This really started to run up right around this time frame, right? So you had this consolidation period here after an attempted impulsive move up. It came back down, basically was flat again, and then here's where the run actually started. And so here, if we look at this as potentially a bunch of shorts closing out positions, helping to drive the price from 15 up to 21, that's a huge gain. $6 on a stock that went from 15 to 21. Big percentage up, and then obviously pulled back a bit. I think at that point we did see from the day-to-day 15-minute increments shorts available perspective, we definitely saw more shorts coming back in, and then this big push up, and then again further selling off there. But this sort of leads me to believe a couple of things. One, because the merger didn't happen until June 2nd, I don't know that the increased amount of shares in the float plays a factor in this now being under 20%. Because I don't know that they would have factored in what the float was going to be when they closed the data on May 28th. What I think is more likely is at that time, IPOE had spent so much time being so heavily shorted, 30, 35, 40% at different periods. I think that these were just, the merger hype was coming up and there was some interest in SoFi and excitement about the ticker change actually taking place. And looking at some green days that got strung together based on that hype, I think a bunch of those shorts just decided to close out, dropping that percentage of the float that was shorted significantly, probably about in half or more, and has sort of put us in this situation now where the percentage of the float being shorted is relatively low compared to what IPOE was dealing with, but still remember, over 10% is considered significant. If we take a look back here again, that's what we know from that side of things. From the daily side of things, if we take a look at the fee, still very, very high. So that's an interesting, part of this equation as we try to figure out. And I'll talk in a second about why we can't get more exact details on what the percentage is. But here you see just 1,000, 2,000 shares available. So there's still a lot of shorts coming in because the availability is so low and the fee is so high. Those things wouldn't be the case if there wasn't still a significant amount of shorts coming in. So it doesn't make a ton of sense that it's dropped incredibly low. I don't think that that's the case. Especially you see here today alone, additional 43,000 came out just from Interactive Brokers. So multiply that out across all the other brokerages as well. And, that's how you end up with a couple percent red day, the price being pushed down. But that's why I say it's holding really, really strong at that support level where it currently is, even with all this short interest in play. Also, if we look at the daily, the ratio is still incredibly high. A ratio of 30 in terms of the short volume on a daily basis is very, very high. So we see, maybe there was some closing out just ahead of the merger, but I suspect that as we get the next reporting date, which unfortunately we probably won't see for 3 weeks or so, I think that you're going to see that percentage come back up, and wouldn't be shocked if that percentage is up over 20% again. So I still think there is a short battle that's happening. I just think it has slightly adjusted its positioning in the vast scheme of things. It's no longer 35-40%, but I think it's a diminished amount, not only because of some closing of positions ahead of the merger as the hype was picking up and the fee was so dang high. Remember, it was 261%. I think that forced a bunch of closing out, and then the shares available in the float grew by quite a bit when the ticker symbol actually changed, and so therefore the percentage, if you had, I'm just going to make up a number, if you had 1 million shares of the float being shorted, and there's only 5 million shares in the float, you have 20%. But then all of a sudden, if that doubles and there's still the same amount, still 1 million shorts in the float, but then the float's 10 million, just because the ticker symbol changed, then all of a sudden it's only at 10%. But you still have 1 million shorts in there. There's just many more shares available in the float now. So if that makes sense, I think that that's what we're looking at. Yes, there was some closing of positions that happened as the merger was approaching and as the merger took place, and then the float size grew, and then I think we have shorts coming back in again. I don't doubt that for a second, based on how high this short volume ratio still is. Nearly 30, well into the 20s, nearly 30, over 30. I mean, these are like big numbers, historically speaking. So I think we're going to see that there's still a lot of shorts coming in. The question is there enough momentum still, interest in SoFi, what have you, to keep pushing the share price high enough to squeeze out some of these shorts? And these aren't long-term squeezes that we're looking for. We're talking about just squeezing out fractions of the shorts over a period of time of just a few days, because they're not going to be holding these short positions for very long if the price is going sideways or up, because the fee is still so high. That's the importance of the fee being so high. Let me see if I can pull this up really quick. I don't want to be here, but I want to be on the NASDAQ. Let's see if I can get, oh, perfect. So let me show you. Oh, this is on MarketBeat, but I wanted to actually be on NASDAQ.com. Do we have, that's Clove. Let's see if we can get there from Clove. We'll just go to SoFi. Sorry, I didn't have this pulled up already. This is a low budget production that we have. But if we look at short interest here from the NASDAQ, oh, come on, Wi-Fi, load it up. You'll see that, normally what we'd be looking for here is just a list of what the short interest is, date over date over date. But holy slowness. Well, I guess this is a good time to remind you that if you're still watching, you're 17 minutes into it. If you haven't liked or subscribed, let's take you having watched this for so long and watched me go through my technical challenges here as a nod in the direction of you should like and subscribe. Okay, so short interest is not available. And this is because SoFi as a ticker symbol is so new. It's not collecting and aggregating and providing the data yet, but it will soon. I don't know exactly what timeline they're on, but this is why we don't know how much short interest is out there exactly in terms of a number, because then we could just do the math. If we said, okay, there's this many shares short and there's this many shares in the float, we could just do the math and say, okay, that's 12%, or whatever it is. But it's not being provided yet, not even on just the NASDAQ.com website. So that's part of the challenge at this point. But that's what I think we are looking at the moment. I think from my own perspective, just from what I have, and like I had said before, I have these options contracts. I think that I'm going to, for the time being, as we sort of try to figure out what's going on with this short interest and daily short volume, I'm going to plan to roll out my call options and just give it a little bit more time to sort of like take shape, and for me to constantly try to like take this changing and evolving information and figure out what's going on, see what the value is in terms of like just the hype and how much people are going to be coming into SoFi in order to just buy it to hold it long, or buy it to try to, play some short-term hype. So to the extent to which that will drive it green, and then also give it some time to sort through, because IPOE was so heavily shorted for so long. I don't believe for a second all the people that just get on their soapbox and say, oh, everyone's claiming everything is a squeeze these days. I'm sure that there are people doing that, but this is not that case. This IPOE was so heavily shorted for so long, and the fee got so high. These are prime examples of data sets that you can look at that lead you to possibilities of short squeeze. This isn't just putting your finger up to the wind and saying like, oh, everything's short squeezing now, so this must be too. No, there's reasons why we identified this as a possibility, and just because there have been so many changes with the merger and everything, it makes it more challenging. And obviously some things have changed, but until I sort of feel like I have a good sense of what those are and how much squeeze potential there is or is not, I'm going to roll out my options, give it some more time to figure out what's going on with the data, and act accordingly from there. But I will certainly keep you updated so that you can take those as just sort of like additional data points or ideas or thoughts that you then blend with your own due diligence, with your own thoughts, with your own risk to reward and tolerance ratios and everything like that, and make your own decisions. All right, that'll do it for this video. I hope you all had a good week. I definitely wish you the best, and I will see you in the next video.